Hello, traders. It's 8 a.m. Chicago time, 9 a.m. Eastern on Tuesday, the 23rd of July, 2019. This is another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1561. Again, thanks for joining. This morning, we have a market that's popped higher across the indices. Risk on sentiment is fairly obvious this morning, with the DAX leading the pack up 1.82% on strong earnings. Euro stocks up 1.46%. The U.S. market just being dragged up. Also, the big news is that the White House, the Senate and the House of Representatives came to an agreement on a debt ceiling increase, which, to those of you who don't know how that works, essentially we've maxed out our credit card, and every 3 to 6 months we keep asking for a higher limit on our credit card, and then we keep reaching it, and then we keep asking for a higher limit, and so on and so forth. And we're at war with many of the countries that finance or fund a lot of that debt. So it's an interesting conundrum that we're in. But that's the big news. Also, if you have not heard, the UK is being led now by Boris Johnson, one of the primary Brexiteers or pushers of Brexit back in 2016. He is now taking over from Theresa May, and this is increasing the chances that there would be a no-deal Brexit. And so that's on deck. There's some other stuff going on, but overall, the market is upbeat on earnings, and also still pricing in a Fed rate cut to come soon, and that is boosting sentiment and putting risk on. And that's what we're seeing. A stronger dollar weighed down on gold prices. Oil was down after the recent rally. Existing home sales data is on the economic calendar, while Visa and Texas Instruments are among the companies expected to report their earnings after market close. That's a summary. I mean, make sure you have a good earnings calendar. It's earnings season, and there's just a lot that could move the market pre-open. This today, in terms of what could interrupt our auction, there isn't too much on deck. We do have consumer confidence from the EU at 10 Eastern, expecting negative 7.2. We do have existing home sales in the US at the same time. And then we get API crude stock at 4:30 Eastern. And that pretty much wraps up the day in terms of what is scheduled. Let's take a look at what was expected yesterday. Yesterday, the day before yesterday, Friday, we took back Thursday's rally, and we put in almost like a bearish engulfing candle on the daily, and we finished near Thursday's lows. So the expectation is that we would likely push the low that we've put in, the 2-day low of about 29.76 at some point. Okay, and the big trade of the day was expected to be the 29.91 to 93 for a rotation down, a test of the overnight low, or the this double bottom, basically this low here at 76, and then a pop higher and into the in the range into the close. Here's what we got. We got a market that's relatively sluggish. You can see that you can fit the whole day in a two-tick Renko chart here. But we had an open auction on the open. We tested up to 87, tested down to 81. Then we pushed to 89.50. Remember, 91 was the key area. Wanted to short 91 to 93. I mentioned that several times yesterday. And it went to 89.50 on what appeared to set up on really a battle between buyers and sellers, with the buyers unable to overcome the amount of selling that was occurring on this local triple top high here. Set up a short rotation for a push of 81.50, and the target was 77 and a quarter at least on into the prior day's close, 77 and a quarter. And then of course, if it had followed our scenario, we would have seen 76.50 and 75 go for a push. And that would put us below last week's weekly low, and it did not. It pushed into 78.50. Remember, 77 and a quarter was the key potential test area. It got us down to 78.50, and then it rotated up to test to go neutral right up here. So we've already broken the IB low right here. We call this a range extension. So the market is extending the range beyond the first hour, high and low. And this generally leads to a continuous push. There's a high probability of a continuous push, but it didn't work out. Instead, we ended up crossing the range, doing a one tick test of the IB high, going neutral, pulling back not quite to mid, and then pushing to 93.50. Remember, 91 to 93, key area to test to short on the first try. I talked about this quite a bit yesterday, and that ended up working out. As I mentioned in the Convergent chat room, do not expect much more than 87.50 and 86 on this, and it went to 85 even, I believe, or 84.75. Didn't really push that far. And so that's how we finished. We ended up finishing the day neutral, normal, almost symmetrical neutral, with a bit of an excess on the high. If you look at the high, not much volume went off up there. It just looks like an excess high with the point of control inside of the IB, a close inside of the IB, VWAP mid inside of the IB. So this looks fairly balanced, with no real clear indication which side it wants to go into next. But then the overnight session brought quite a bit of happy news. Again, the agreement on the debt ceiling, as well as good earnings out of Europe, all of that has led us into a kind of a slide up. So the Asian session was pretty quiet right in here, fairly quiet, not much there. They're really kind of a sluggish play. And then at 2 o'clock, somewhere around here, we get the Europeans. The Europeans start to squeeze higher in a profile that looks multi-pronged. The profile, the overnight profile, looks like a pitchfork. It's got four prongs in it, four distinct areas of acceptance and three distinct areas of rejection, with a weakish high on OK volume, 181,000 contracts traded in the overnight session. Not much to glean from the overnight session except that the overnight inventory is almost completely long in price and in delta. The delta's relatively strong coming into the session. Here's how it looked like in the order flow. We see that this is the close of yesterday, the pit close of yesterday. The market reopens, closes again, reopens, and this becomes Tuesday's session. And the European session is relatively quiet, not much in terms of volume or anything. And then from here on out, boom, we have this nice little channel, rising channel with a quick flutter through 3,000 just about a half hour ago or an hour ago. And we've been holding steady at the 3K millennium figure. So we're opening right on top of the millennium figure, with bids and offers really scattered all about. We see that there's a big bid here, 1213 at 95, but that's only been around a short while. It's not something that's been sitting here the entire session. The bid at 87.50 has been sitting here all along. It is right on top of it's right on top of the point of control, and it's been running. It's been running for the entire session. Again, 87.50 is yesterday's point of control. Pretty good size there. On the top, the key area for me on the top is the 3004 area. Not seeing much liquidity there. This entire stock zone block is lit up a little bit, but we're not seeing much liquidity there still. Again, this picture looks different once the equities kick in, but we do get an indication of where the liquidity's been sitting pretty much the entire night. Okay, so that's where we are. Let's take a look at what we're expecting for today. Again, the purpose of doing this is not to predict or lock ourselves into an idea of what the market should do. Nobody cares what you or I think the market should do. We're simply creating a plan for what we will look for once it plays out one of the scenarios. Okay, normally there are 5. So I'm going to extend out this profile from yesterday just to see where the bulk of the volume is. And we see that the point of control is at 87.50, that same point of control from yesterday, and that area that had a lot of liquidity beneath in the in bookmap. Again, there it is, 87.50. And so we're opening up here at 3,000. Not the best spot to be opening up. Well, these guys are just talking here. Got 1 second. News feed. The guy's just talking. Um, this morning we're opening right inside of the high volume node of last Friday. My expectation is an open auction that breaks the overnight high, pushes into the point of control, tangles a little bit. I expect us to have a reversion back into the 93 area before we hold steady and start to move higher. I expect us to test up into the 3004 is key up here. I expect us to test into 3009, in 3009 from 2993 or so, giving us a fair amount of range, about 16 points. Again, Tuesday is generally the more volatile day of the week. That's what I'm expecting for a primary scenario. So with that, I'm simply going to wait to see if any pullback towards yesterday's range. Yesterday was very tight, by the way. Any pullback towards yesterday's range, I'm going to look for clues that it's being supported, looking for icebergs getting hit, reloading, looking for the large delta or the very large delta size kicking in on the buy side and so forth, and I'll join them. Once I join them, I'll look for a return back to 3,000 and a push to 3,004, and if it clears 3,004, then I'm looking for 3,009, 3,010. Okay, so this could be the next run. We've tested lower, we failed to hold, and this is likely the next run up to 3021.50 and beyond, to infinity and beyond. The secondary is because the inventory is long overnight is a push higher into 3004, 3005, and then an impulse down that brings us back into equilibrium, brings us into this 87.50 magnet to hold here for a bit, and then to finish somewhere around probably above the prior day's high, yesterday's high, again, very tight range, somewhere in the 3,000, and then to hold steady. Scenario 4 is an open test down, drive up. If we do get an open test down and drive up, then this thing could push into 3018 quarter, 3022, maybe even 3024 to all-time highs. It's just a function of what comes out today. But those are the two main scenarios. I am expecting a reversion down in either case. I don't intend to trade the reversion down unless it fails, tests upwards and fails first. I intend to lean long, looking for a push into that 3009 area. Okay, pay attention to 3004 this morning. There's likely to be turbulence here at the 3000. It's a major strike price, and I'm expecting a fair amount of activity. I mean, since we have flushed into it, we've gone completely sideways. Are you with me? Anyway, I'll leave you with that. The AMA from last Thursday has been released. It was released on Friday. Hopefully you listened to it. I was able to answer about 20 questions out of the 102 or 104 that were submitted. An insane number of questions were pre-submitted, plus a few asked during the session. For an AMA, that's got to be a record for me in terms of questions. Not sure if it's because people are confused or because there's a chance to ask, but in either case, it's linked in the YouTube video. Here, and it's available to you to watch. If you signed up or registered, you should have received it by email. Check your spam or promotions folder. It should be there. Good luck today, and I'll catch you tomorrow morning. Take care.